presentation which has been uploaded on the stock exchange, but I'll put it up on the screen and sorry. Just give me a second, please. Karan, can you confirm if you can see the?
Yes, sir, we can see the presentation.
All right. Thank you so much. I'll let Vikram to speak about the industry, etc.
Yeah, I'm happy to do that, Kalo. Actually, move forward on the next two slides. Oh, okay. Sorry. We'll get a very bad echo. Okay. No. Okay. Can you hear me?
Yes, sir, we can hear you.
Can you hear me?
Say your voice is echoing a little.
Can you hear me now?
So it's not clear. If you could say something again.
Okay, let's try something else.
Yeah, this is much better, sir, I think.
Okay, just one second. I think because we're too confused along with this struggling. Is that better now?
Yes, sir, this is much better.
Perfect. So, Kalol, if we just move forward to the next two slides, and let's just, you can move forward one and one more. And one more. Yeah. Okay. So the first slide we actually thought, and if we can make it larger, Kalol, as well. I don't know if that's possible. But we thought a good starting point, especially as we've all been impacted by COVID, whether it's our guests, our colleagues, people across the country, organizations. We thought, let's just go back to really what do we stand for as an organization? What do we stand for as the Oberoi brand? And for us, starting with Rai Bahadur, who formed our company, the guest has been at the center of everything that we do. And we often say the guest is everything. So it's about enduring, caring, passionate, genuine, sincere, kind. And that's not only with our guests, but it's also with each other. And Karan, I was just mentioning to you that one of the things we're working on is to get our colleagues, and our attempt will also be to get their families vaccinated with COVID as quickly as possible. And this is really important. It's really at the center of everything we do. Care for each other and care for our guests. And unless we really show care and conviction for our colleagues, we can't expect them to do that for our guests. And that's been our legacy. It hasn't changed in over 80 years. We also try and provide our guests with personal attention, so personalized service, which is meaningful and sincere in the way we deliver our service. And one of the things we've done, I don't know if people have read the HBS case study, the Harvard Business School case study on Oberoi, but one of the things we do is we're very meticulous about the standards that we follow across our hotels. Everything is documented, whether it's our service standards, our SOPs, etc. And we focus a lot on training, but at the same time, we say no two guests alike, and we give our colleagues the freedom to do whatever they feel is right, provided they follow the values of our organization in the delivery of service. And I'd just like to give you some NPS scores. Our NPS scores actually during the COVID period, so this is up to December this year, are actually 1 percentage point higher than they were. So if I include Oberoi and Trident hotels, our NPS scores, and I hope everybody's familiar with Net Promoter Score, but our NPS scores have gone up by 1 percentage point, and 1 percentage point is significant. It's not, it may sound small, but the way it's calculated, it's significant. So it's gone up to just under 90% for Oberoi and Trident hotels combined. To put that into perspective, if you were to do a Google search on NPS for, let's say, iPhone or a Mac computer, they'll be in the range of about 60%. So it just puts it into perspective. I think BMW cars and Mercedes, certainly in the US, that are about 60 odd percent. Tesla is one of the companies that has a very high NPS score for its cars. So we can just move to the next slide. This year, we actually started with Oberoi 1, and we had got guest feedback on the need for a recognition program, stroke loyalty program. And one of the things that we did before we launched it, we actually did we sent out a questionnaire to, I think it was over 2,000 of our guests. We got a response rate of nearly 50%. And based on that feedback, we said, how do we design our program? It's not a points-based program. It's a recognition-based program to really recognize and delight guests who use our hotels frequently. And there are elements of surprise and delight in it, so we don't announce them, because if I tell you something's going to happen, it's a given. But if I surprise and delight you, that has a far more significant impact. So there's certain things in the program that are predefined. There are also certain elements that are surprise and delight elements in the program. And we hope with this, we will be able to gain even further loyalty from our guests. It's basically 3 tiers, has been pointed out. So I'll move to the next slide. A little bit about Trident. Trident is modern. We have very nice location, and put a lot of effort and emphasis on getting it right the first time. For us, that is really important. If we're going to do something, let's get it right the first time. And again, relaxed, informal. I think sometimes we can be more. We need to be more informal, welcoming, hospital, etc. And our values are defined. And at Trident, you're assured, you're So that was the distinction that we made, and I think it's been the right distinction that we made. Just gives you the various percentages under the various programs. Let's move to the next one. This is what we've been doing during COVID and also pre. And one of the things that we focused on in COVID or during COVID is special, particularly around F&B, and we'll cover that later on. Oh, sorry, just go back. Sorry, Chloe. On F&B promotions, etc., special venues for our guests, and we'll talk about that a little bit further. We were just talking before the call started on how busy hotels are on weekends, including city hotels. We and others have also come out with weekend offers. We've done it for Oberoi and Trident. We have something called Unforgettable Holidays, which has been around for a long time. It's a branded program that we run across Oberoi hotels. And for our similar hotels, we have something called Himalayan Vacations. And in COVID, these programs have been very, very popular. One thing I'd like to just highlight, and again, I'm stating the obvious, but what we've seen is across our hotels, leisure destinations demand has been very, very strong. In fact, for example, Wildflower Hall and Sukvilas, we're actually doing better than we were doing at the same time last year pre-COVID. So because Indians are traveling within India, people who were going overseas are no longer going overseas and traveling within the country. So we've seen strong demand at those two hotels because both those hotels were primarily Indian guest focused. We had very few international guests at those hotels, and those hotels have done therefore extremely well. But even overall, whether you take Rajvilas, Udaivilas, Vanyavilas, etc., leisure demand has been really strong. And leisure demand in the premium segment has been even stronger. So if we look at Oberoi versus Trident Leisure, we see that people are willing to pay more to stay at an Oberoi, and considerably more. Our average room rates, for example, at Sukvilas are over 35,000 rupees. At Rajvilas, they're a little bit more. At Vanyavilas, they're even higher. So that's the other interesting trend that we're seeing in our city hotels. We're seeing weekend business, we're seeing leisure business. We're still not seeing enough corporate business, but my perception is that with the number of cases significantly coming down, people starting to go back to the office, I think we will see corporate business also pick up in the next couple of quarters, or at least I hope that happens. Assuming we don't get any COVID strain that causes a surge in any of our key cities in India. We can go to the next slide. Great. Just, strong partnerships, strong alliances with like-minded brands. So we work with all these, and this is just an example of some of the brands. There are others that we also do alliances with. This just gives you an indication of how we can reach out to new guests, and then hope that once we reach out to those new guests will become loyal members of either Oberoi or Trident hotels. We can move to the next one. Sorry. Again, I think I've kind of said this already, but this just shows you in a nutshell that really there's been, particularly in our city hotels, food and beverage, room occupancy still continue to be low to moderate, but there's strong, people are going out and dining, people are eating at home, people are taking our city hotels, and we see that trend continuing. We can move to the next one. Again, F&B experiences, yeah. Social connect, again, various examples of social connect that we've been doing. I won't dwell on it. We can move to the next one, sorry. Maybe I'll take a few minutes to talk about the Oberoi and Mandarin Oriental Alliance. I feel once international travel picks up, and my perception is, or my guess is, we all know how strong the vaccination programs are in the US. Biden has now committed to vaccinating 1.5 million people a day in the US. The UK has a very, very strong vaccination program with the NHS. And Europe, which was a little bit slow to start, is gaining momentum with vaccinations as well. And those are key source markets for us. So I think come winter, and our season typically when foreign or international travel really picks up is in the month of October. I feel that we will see foreign travel again coming into India. I don't know to what extent that will be. And I was on a recent call with the editor for Travel and Leisure in the US. They'd done research with their readers, and that also suggests that people will start traveling. Initially, it will be to closer destinations, but in time, and October is a long way. Again, I think international travel will start again in October. I hope I'm right about my analysis on that. Time will tell, but I think that will happen. And if that were to happen, I think we will greatly benefit. I think the other thing is people will be more cautious about choosing hotels and brands that are recognized for quality, and they'll be willing to pay a premium. We've already seen that amongst our Indian guests, and I think that trend will continue even with our international guests. So I think the brands that are at the premium level will, and that have a strong reputation will benefit. We can move to the, the alliance. So I think once international travel picks up, the alliance between Oberoi and Mandarin should give us access to the most affluent guests in the US, in Europe, and they also have a strong presence in Asia and in China. So I think long-term, this is something that will bring direct benefit in terms of guests and revenue to Oberoi hotels. And I hope we can do the same for Mandarin by bringing them new guests that will help Mandarin hotels as well. We can move to the next slide, Chloe. Thank you. This just talks about the various initiatives. So they're around marketing, sales, F&B, so whether it's food promotions, whether it's working with our sales colleagues at Mandarin, the RFP process, we're assisting each other with the RFP process, various marketing initiatives, sharing of best practices, training for HR, spa promotions, and sustainability, which is another important element. In fact, prior to COVID, we were virtually going to eliminate all plastics in our hotel. That involves some investment, and we put that on hold. But I hope once business improves, we will be able to, for example, get rid of all plastic bottles. Today, we provide plastic bottles, as do many hotel companies, in their rooms for the complimentary water. Room occupancies are low. We're going to change that completely, and everything is in place so we can move away from plastic. We already don't have plastic in our restaurants. We've moved entirely to glass. As an example, but the last step is to do it in our rooms as well. One of the other things we're doing is investing in renewables. So a number of our hotels are going to be, our Gurgaon hotels are 100% renewable powered, but we're also now doing that across a number of our other hotels. That work is under progress now. And in the next couple of months, in these hotels, anywhere between 50 to 60%, varying on hotel, will be generated through renewables, actually through solar. So let me not say renewables, but through solar power. We can move to the next slide. Yeah, so I'll hand over to I think I've talked enough. Sorry for that. I hope it may not have all been financial, but it gives you an understanding of how we think, what is important to us. And I think that then results in our financial performance as well. Thank you.
Thank you, Vikram. I hope you can hear me because I'm using Vikram's microphone.
Oh, why don't we? I'll put mine on mute, and then you can use yours, Chloe. There we go.
Okay. So our performance this semester has been good, and it's actually exceeded expectations in general.
Hello, sir. I think Vikram sir.
Am I audible? Sorry, am I audible?
We can hear you, sir, but I think
We
Vikram
can't hear
sir's line is
you.
not.
Sorry.
Mike. Okay, I'm done.
So revenues, this is the a snapshot of the Q3 results. Drop in revenue overall has been about 63%, and I have comparisons to show how it has fared quarter on quarter. Income from operations are down by 63%, other income down by 57%, and these are the only negatives in this pandemic era. Uh, the rest of it is mostly positive. Our expenditures dropped by 40% in the quarter. Variable expenses dropped by 56%. And the most important part is the drop in the fixed expenses by about 30%, at least half of which is sustainable going forward. Uh, we've also been able to manage our working capital much better. Net operational assets and liabilities in 9 months down 117 crore. Uh, with a reduction in the weighted average cost of debt by 80 basis points, um, which has effectively resulted in a reduction in interest payout by about 6 crores as compared to the same quarter last year. Borrowings have reduced by 151 crore post the rights issue, where we used the money, the proceeds from the rights issue to repay our debts.
Kalol, may I just add one point on this slide? One of the things we did was to forecast month on month for this year, for this financial year, what we expected to do. And I think Kalol touched on that, but I would just like to explain that fortunately, we have surpassed all our internal forecasts in Q3. I just wanted to highlight that.
Sure. Thank you, Vikram. Yeah, that's right. And that has been consistently happening in the past 3 years. But since these are internal targets, therefore these are not presented in the slides here. This particular slide shows quarter on quarter vis-a-vis the same position last year. So if one can see, the revenue drop in Q1 was 87% as compared to Q1 of last year. The revenue drop in Q2 was 78%, so the decrease was coming down in Q2, and the decrease in revenues in Q3 is 63%. So it is consistent. In fact, in Q3, the improvement that we have seen is quite substantial, as Vikram mentioned, and likewise variable costs, which were down 85% in Q1. Now, since that is directly, it's dependent on revenues. Therefore, it comes in sync with that. So 71% drop in Q2 and 56% drop in Q3. Fixed costs, on the other hand, dropped 20% in Q1, and that was primarily because a number of measures that were to be taken really took some time to come into play. And therefore, we see a much larger savings in fixed costs in Q2 and Q3. Effectively, we saved fixed costs about 29%. And variable cost about 65%. Just to give a flavor of the areas where we were able to achieve savings and costs, payroll, of course, is the largest, followed by consumption, where consumption has to come down, and that's mostly variable expenses. Passage and traveling and other consumables, etc., are much lower. Advertisement, of course, has been tepid during the first 9 months. Did not make any sense to really spend much on that. But this, of course, is going to increase going forward. Power and fuel also has seen considerable savings, and this will probably increase with our solar plants coming in several properties. Repairs, etc., also we have been very cautious about doing repairs, which are essential to be done. Also, a mention about the Uber Center of Excellence, which is basically the incubation center for leading our transformative digital interventions. And more or less the areas that have been highlighted on this slide, these have all been covered currently as we speak. This, to remind all our friends, is basically an initiative that we had taken last year, and it was quite it was good for us that this kicked in before the pandemic really started, and therefore we were able to reap the benefits of this during the period of the pandemic.
I think, Kalol, maybe two things. May I just add two things
Sure.
on this? Because first of all, this is really Kalol's baby, so I have to give credit to Kalol and his team for that. But I just wanted to add two things. One is that we are able to do things in a much more efficient manner, in a much better manner in all the areas that have been highlighted in this slide. I think the second thing that I just wanted to highlight is that there's also been cost benefits as we have centralized a lot of these processes. So we've been able to reduce the number of people at our hotels and bring greater efficiency as a result of TOCE. So we're getting better quality at a better cost. I just wanted to highlight that.
Thank you. Yeah, and also, what has really helped us here is to get a common visibility across the group at a central point, and therefore be able to take initiatives and then roll them out across the group, which would have been difficult, especially in times where people are unable to really attend office, etc. It was possible to roll out all these things centrally. So it's been very helpful to all of us. Moving on to the standalone P&L results, as I mentioned and as Vikram mentioned earlier, has been better than our own expectations. Although we ended with a EBITDA loss this quarter in EIH of 16 crores, this is much better than what we had expected. In fact, some of our group companies, as we have highlighted in one of the slides after this, we've actually done profit even at a PAT level. So that really speaks volumes of the path of the recovery. I won't dwell on this much because these figures are already there in the public domain. We continue to have a robust balance sheet. Not only continue, but we've actually, if one were to compare our balance sheet today versus what it was last year, it's more robust even in this environment. So therefore, our net leverage, as we see here, is 0.08x, less than 0.1. This, of course, will go up slightly with the last few months of the losses. The debt overview is very strong with the weighted average cost of debt at 7.86%. We still have undrawn facilities to the tune of 482 crores. So way to go. As you can see on the right, the weighted average cost of debt has come down quarter after quarter, and really speaking, that's really putting us in a very strong position. This may be interesting to some of you. This is a geography-wise occupancy growth. These include the various locations in India, and I've also included 3 of our locations overseas, just to give a flavor of how demand has picked up and how occupancies have grown over the 3 months, 3 quarters rather. So in Delhi, the growth has typically happened in the last quarter, more than the previous 2 quarters. In case of Kerala, we already had a very high occupancy even in Q2 because of very tactical businesses. Similarly, in Maharashtra, Rajasthan, because of tactical based businesses that were taken, these occupancies in these months were also good. But in Q3, it has really improved a lot. Likewise, the case with Dubai, as you can see in the graph. Egypt has been moderate. It's slightly come down. Morocco has started picking up. The rest of the geographies where we operate are still not open to travelers, and therefore those have not been depicted here. So this gives an overall impression of how the travel and tourism has been panning out across the globe. Some trends in India, April to December, and this includes all our managed properties. So as you can see, these have been segregated into the various categories that we use to monitor, which is Oberoi Leisure, which is the premium properties that we have under the Oberoi brand, the Vilas properties, Oberoi Metro properties, the Trident City properties, which includes properties like Hyderabad, like Chennai, and so on and so forth, Trident Leisure, Trident Metro, and others. This again is for analysts to look at and get a view of how trends are moving across. And as Vikram rightly pointed out, leisure is really picking up the fastest, followed by the metro locations where food and beverage there's been a lot of traction in food and beverage. I've also provided data on what was occupancies last year. That, of course, is not comparable, but just as a matter of reference, this has been provided. This is again a trend which shows encouraging RevPAR recovery in all these segments. So, especially in Oberoi Leisure, you would see, again, to reiterate the same point, that the growth has been quite steep, and the trajectory is quite positive. This is basically a bubble chart which shows the positioning of the financial results as they stand at various quarters and at the end of 9 months. So you can see the position for yourself where we are moving up slowly. If you see Q2 of FY21, we were below the 20% mark, but Q3 FY21, we've moved up beyond 40%. Likewise, the 9-month figure is also on an overall average. And this is again applicable only for Oberoi Leisure properties, just to show the trends in the business. As I mentioned a little while earlier, our affiliate companies have been doing very well. And just to point out, except 2 of these, which is Mercury Car Rentals and EIH Flight Services Mauritius, the rest of the 4 companies do not have any debt. EIH Associated Hotels Limited did a positive TCI and a positive EBITDA, of course. Mashobra Resorts did exceedingly well. In Q3, actually, it performed better than the same quarter last year.
And the hotel only opened, I think, in September, the 23rd, I think.
Yes, that's right. So therefore, very nominal. I mean, it opened quite late, but still was able to perform so well. Therefore, this really gives the reason why EIH International is down is because most of the locations where we are located are still closed, including Bali, Mauritius, etc. But again, some of the hotels where we get management fees from, which is the management contracts, for example, Alzora has been doing exceedingly well. Egypt has been doing reasonably well, and so on and so forth. This again is just, basically that brings me to the end of my presentation. This is just to give the corporate structure. Many analysts in the past have asked for it, and therefore we just gave it for the benefit of everybody. If there are any questions, then we'll be happy to answer. These are our hotels in India and around the world. Thank you so much, and we'll be happy to take on any questions that you may have.
Thank you.
Thanks. Thank you, sir, for a very detailed presentation. We will now open the question and answer session. Anybody who wishes to ask a question can please raise their hands and we will unmute your lines. We will wait for a while the question queue assembles. In the interest of time, we'll request you to restrict your questions to 2 per participant. We have the first question from Mr. Amit Agarwal. Amit, if you can please unmute your line and go ahead.
Hello, can you hear me?
Yes, we can hear you, Amit.
Good morning, Amit.
Good morning, Mr. Roy.
Good morning, sir. How are you?
Good, thank you. My first question is regarding the farmers' protest. Is it affecting our occupancy in Shimla and Chandigarh? Because the roads are blocked around Delhi. So how is it affecting our bookings at Wildflower as well as in Chandigarh?
So I actually spoke to our general manager yesterday, coincidentally, at Wildflower Hall. And although I didn't specifically ask him that question, to the best of my knowledge, it hasn't impacted us. But I can't say for sure. I'm sorry. I can find out and get back to you. But I asked him about overall business. He was positive about that. So I can only assume that it hasn't. But I didn't specifically ask him the question you asked me. Khalil, do you have any insight?
Yeah, well, I think the farmers' protest started quite some time back, and as you can see in the results, and as I mentioned a while earlier, both these hotels have been doing very well in December as well, when the farmers' protests were already there. So really speaking, I think Vikram, you're right. It's not really affected much.
Because January, the protest has been more severe. That's the only worry.
Yeah, I don't think it's had an impact. I mean, the most severe was in NCR, as you know, and I look at the occupancies for our hotels every day, and in NCR where we saw for those of us who live in Delhi, and we read it in the paper and saw it on the news. Despite that, our Delhi hotel occupancies and Gurgaon hotel occupancies have not been impacted by that. So I think if one were to talk about areas like Simla, the impact will be insignificant or not at all.
Okay. And my next question is, since the two hotels, Whiteflower and the Gurgaon hotel, are both managed by Oberoi's, we don't have any stake in the properties. So how much revenue they add to the overall total turnover of the group?
So actually, let me just clarify that Wildflower Hall is a joint venture. So we do have a stake in it.
I'm talking about Sukhvilla, sorry, Sukhvilla and the Gurgaon property.
Yeah. And are you talking about, I don't have those figures and Khalil won't have them either on him. But we can maybe give an overall in a stable year what management fees are.
Okay.
I mean, I don't know if you recall the figures.
So the Gurgaon hotels, anywhere between 5 to 6 crores. And Sukhvillas, of course, till the previous year, it wasn't really, the business was just picking up because it was a new hotel. But this year it's been really rocking. And we'll get to know the figures by the end of the year, what it comes to. But I think between the three hotels, it will be reasonably good management fees.
So in Gurgaon property, you're getting 5 to 6 crores per annum?
Yes, minimum. So, it's actually more than that.
Okay. And my third question is, what is the status of the London project?
So I don't have any further update for you other than things are slow. But I don't have a direct update for you on the London project at present.
So that means that will take time, 3-4 years from here?
I'm hoping it'll be sooner than that.
Okay. And my last question is, what about the property Oberoi Clarks? That is not mentioned in your annual report. Who owns it? What is the status? What is the ownership status of the project?
Oberoi Hotel, the Clarks is owned by, actually that's quite a historic hotel for us. It was the first hotel in our group, but that's owned by Oberoi Hotels Private Limited.
So we don't have any direct stake in the company?
I beg your pardon?
We don't have a direct stake in the company, that particular hotel?
No.
No, it's fully owned by the promoter entity.
Okay. That's your personal property, that means, right?
That's correct.
Okay, thank you. Thank you.
Thank you so much.
Thank you. We'll take the next question from Mr. Himanshu Upadhyay. Himanshu, if you could please restrict your questions to 2. Thank you. Himanshu, please go ahead. Okay, we'll take the next question from Achal Kumar. Amit, if you can please unmute your line. Thank you. Can we take the next question from Mr. Achal Kumar?
Hi. Good morning, Mr. Oberoi. This is Achal from HSBC.
Hello, Achal. How are you?
Hi. Hi, sir. So I had a couple of questions. So first one, So you have shown how the recovery has been over the last couple of quarters, but now, of course, so the third quarter, which is ending to December, is seasonally strongest quarter. So now the question is, how are you preparing yourself for the weak quarter ahead, that is quarter to March? Or do you think that quarter will still remain strong given the pent up demand and all those sort of things? So how do you see the next quarter in terms of revenue as well as cost? And why I'm saying as well as cost is because so you have shown the cost development over the last 3 quarters. You've been able to cut the fixed cost, but now as you increase the size of operations, the cost will come back. So if you could please give us a bit of a color on that side.
Sure. So Achal, maybe the first thing I'd like to say is actually the month of February historically has been the strongest month for our hotels, certainly. But I would not only say our hotels in the north of India. That has been the strongest month, and led by two things. One is, of course, domestic demand, but also international travel, which today isn't there. But February actually is a very good month. Can I talk about, I don't know if I can talk about what the trends on currently
maybe
are.
on trends, but
Okay.
obviously
I won't give specifics.
Yeah.
So we monitor our business on books, and we also do our forecasts based on that. And those are highly accurate. And these are 3-month rolling forecasts. The closer we get to, so 1 month out, they are, I mean, very, very accurate. And February will be we're already in February. We are seeing very strong demand, better than previous months in the month of February. So that's the second thing I'd like to add. March is actually not a bad month. It's not as good as, for example, November and February. November and February typically are the 2 very good months, but March is also a strong month. So I see that being strong strong demand in Q4 as well, both based on a historic perspective and whatever we see happening today. So I don't see that as a challenge. I think your second question, Archel, was on costs. Some costs will come back, but I think we will be able to maintain cost efficiencies, and increases in revenue or increases in costs will not be proportionately met by increases in costs. Or sorry, increases in revenue will not be met by proportionate increases in cost. Kalon, you may want to add some more.
No, I think that's what it is. As we've maintained that the cost efficiencies that have come in, much of it is sustainable, especially the fixed cost. The variable cost, of course, will go up. Some part of the fixed cost will go up, but we've got a YTD saving of 30% on fixed cost. We at least hope minimum half of it will at least is here to stay in the long run.
Right. Thank you. My second question is around the industry structure. Of course, I mean, although all the industries, including hotel industry, is going through a tough period of COVID, and hence there has been a kind of a possibility for more acquisitions, and consolidations and all. Typically in Indian hotel industry, I mean, of course, a lot of consolidations or a lot of exits have happened in the non-branded category. So, and none has been reported as such in the branded ones. So, do you think? How do you see the industry structure evolving over the next, say, 12 to 18 months? I mean, do you think there'll be more opportunity for EIH hotels, particularly to do more acquisitions at a cheaper price, and not for EIH but other players also? So, how do you see the industry structure evolving over the next 12 to 18 months?
Archel, it's very hard for me to comment on that, but I will say one thing. Just sorry, one moment. What I'd like to say is that there was one hotel that I know of, which is a well-constructed hotel of good quality that was a JW Marriott in Jaipur that has become a Leela. It was closed for a few months. They've now reopened. And that's a quality hotel. I think, again, most of the hotels, the reason why it hasn't happened in the branded segments, certainly in the categories that we are in, which is the luxury and premium segments, is because really those hotels haven't come up. Certainly I'm not aware of any hotels that are quality that are under distress and therefore are selling at a discounted price. I know other hotels, and we all may know that there's a very nice hotel, a wellness hotel. I won't mention the name, that I believe is for sale, but the price is very, very high. And there are others as well. There's some in Rajasthan as well. So I think really, I don't know. Will quality hotels come up for sale? I believe they will. Will there be a price that makes sense? I don't know.
Mm-hmm. Okay.
Thank you,
sir. Thank you so much. Good luck, sir.
Thank you so much.
Thank you. In the interest of time, we'll have to restrict this to questions from Deepak, Chirag, Anuj, and Sumant. If each one of you can please restrict it to one question per participant. We will start with Deepak. Deepak, if you can please unmute your line.
Hi, thank you for taking my question. I just wanted to know what is the occupancy level for Q3 FY21 and where do you see the average? What was the average occupancy for 9 months FY21?
Sorry, I didn't hear the question.
Sorry, I couldn't get the question.
Hello, Deepak. Sorry, if we could just request you to repeat the question. I'm really sorry, we didn't hear it clearly.
Sure. I just wanted to know what is the average occupancy for the third quarter of 2021 and what was it for 9 months FY21?
Sure, we'll just give you. Do we have those figures?
Yeah, it's there on the presentation, but I'll still give you the figure.
I think it's around 40%.
Yeah, on an average, it will be about 40%.
For third quarter of 21 and for 9 months?
And I think that was about 20 odd percent.
22%.
Yeah.
Okay, and if I can just ask one small question, you had mentioned that you think you'll be able to break even at 40% occupancy level a year back. Do you still maintain that now breaking even will be easy for you on EBITDA lines in the coming quarters, given the fact that you are already averaging occupancy level of 40%?
So Deepak, I think we actually haven't mentioned anything like that in the past to say that our break-even is at 40%. We've maintained that break-even levels are different for different category of hotels, right? For the break-even hotel for a city hotel will be quite different from a break-even point for a villas hotel. So 40% is a high percentage. Actually, individual hotels break even at much lower levels than that, especially the leisure locations where the ARRs are very high. Having said that, there is a corporate office expenditure also to be taken care of. But just to give an indication of where we are, as you saw that in case of Q3, the EBITDA of EIH Limited was only -15, right? And EIH associated hotels, if you see, it was an EBITDA positive. So therefore, and of course, I've given some affiliate companies as well, where in all cases we've achieved, EBITDA positive. So therefore, that would probably answer the question, Deepak.
Sure. Okay. Thank you.
Thanks so much, Deepak. Thank you.
Thank you. We will take the next question from the line of Chirag. Chirag, if you could please unmute your line and go ahead.
Good afternoon, gentlemen. Two quick questions, if you don't mind, from my end. One was in terms of ARRs, how do they compare for the third quarter and the 9 months compared to the previous year? That was my first question.
Do we have that?
Yeah,
did we present that data?
It's there on the slide, Chirag.
So Chirag, maybe one is the data, but I think maybe I'll just give you what we see beyond the data is that for Oberoi hotels, Oberoi Leisure in particular, but also Oberoi hotels, typically our average room rates from overseas guests is higher than it is from domestic guests. So we've seen, if you compare it to the same time last year, and of course, before I say at the same time last year, the other thing is that international travel historically in the winter months is the strongest, whether that's business or even leisure travel. And across our industry, you see spikes in rates come October. Hotel companies raise their rates in October, sometimes even before that, 15th of September. And that's because of the buoyant demand from overseas. Having said that, we've really been surprised at how the propensity to pay from our Indian guests. And if you, and let me give you an example. The Oberoi Vanyavilas is doing an occupancy which is similar to what we were doing last year, with a rate of, I think it's, if I'm not mistaken, sorry, let me just, the Oberoi Vanyavilas is doing just under 38,000 rupee average room rate. Uday Vilas is not too far behind that. So there's certainly a propensity to pay. The other thing we've, for example, I'll give you a completely contradictory comparison. The Oberoi New Delhi, we're still averaging a very, very strong rate at the Oberoi New Delhi. Occupancies are low, but we took a decision not to discount. If you go online, you'll see the rates online. And fortunately, we continue to be RevPAR 1 on STR in Delhi, ahead of hotels like Taj, Leela, etc. So it really varies from location to location. But overall, I would say that we were surprised at the propensity of the Indian guests to pay premium rates for premium accommodation.
Great, thank you very much. The second question I had, and I suppose there are a few ways of looking at this. You've obviously done a lot in terms of cost cutting, especially on the fixed side. And what we wanted to understand is, if you to get back to profitability, which you saw in FY20, and even FY20 was a truncated year, you saw a little bit of an impact in FY20 as well. To get back to that level of EBITDA profitability, you used to be at sort of 65, 67% occupancy level. You've reduced your fixed costs quite a bit. To get back to that level of profitability, what kind of occupancy would you require compared to what you had in the past, which was 66, 67%?
I don't have specific, and Kalol may or may not. I don't have the numbers to answer that question.
So just as a trend, I can mention, Chirag, that since our fixed costs, and we've mentioned this before in our conversations, that our fixed costs will be down by between 15 to 20% on a consistent basis. So typically, you can assume that the level of profit that we used to get at a 67 to 70% occupancy earlier will be somewhere between 60 to 65% in my view.
Great. Thank you very much.
Sorry, may I just add one other thing? Maybe I'm saying the wrong thing, but and please forgive me if I am. But you have to drive revenue, and I think success will be measured by our ability, even with suppressed demand, and demand is increasing. But how do we get a larger share of revenue? There's only so much you can do on costs. And I'm not saying costs are not important. But to me, the more relevant question is, how do we drive additional revenue and greater market share? And just to add to that, I don't know if you look at STR data or you subscribe to STR data. In most locations, we are in Oberoi hotels at RevPAR 1, in some cases RevPAR 2. I think it's all about, even in a crisis or even in suppressed demand, driving revenue. Managing your costs efficiently, but driving revenue.
Thank you. In the interest of time, that will be the last question. Thank you, Mr. Vikram and Mr. Kalol, for taking out time and answering everyone's questions so patiently. On behalf of Ambit Capital, I wish you all the very best and thank you everyone for joining the call. I will now hand over the call to the management for their closing comments.
Well, I just wanted to say, Karan, thank you so much. And to everybody who takes time to join this call, my sincere thanks on behalf of Kalol, myself, and people in our organization. I wish you, your colleagues, and your families well. I also hope you start traveling again. COVID cases have significantly come down. I know people are starting going back to the office. We're in the office as well, and that's good for our business. So my best wishes to you, to your colleagues, and to your families.
Great. Thanks a lot. Thank you. Ladies and gentlemen, you may now disconnect your lines.
Thank you so much. Cheers. Bye-bye.